The Corporate Transparency Act has broad-reaching effects, and it even extends to HOAs and condominium associations. And why is this so? Well, under the Corporate Transparency Act, or CTA, it requires reporting companies to submit their information to FinCEN, which is a branch of the U.S. Department of the Treasury. However, there are 23 exemptions to the reporting company requirement. And I'm not going to go through all of them in this video, but one of the exemptions there is the tax-exempt entity exemption. And this exemption applies to 3 different types of entities. The first is an entity described in Section 501C of the IRS tax code and exempt from tax under Section 501A. And an example of such an entity is a 501c3. The second type is a political organization described in Section 527E1. And the third type is an entity that's described as a trust in Section 4947A. What's notably missing is an entity that files a tax return under Section 528 of the tax code. And the entities that file under Section 528 are most HOAs, condominium associations, and planned communities. So what does this mean? Well, if you own an interest in an HOA or you serve on the HOA board, you're gonna have to report information to FinCEN. And this may change both property management and community association management of HOAs. This may also affect association management software. If you're an HOA and you need to file a report with FinCEN, what pieces of information are you gonna need? Well, the first is reporting company information. And this includes the HOA name, the HOA address, the state where the HOA is located in, and an EIN number from the IRS. The second piece of information is the company applicant information, but this is only required if you create an HOA after 2024. And a company applicant is the person who either forms the HOA or directs its formation. So what do company applicants need to report? Well, they need to report their name, their birth date, their business or residential street address, and a government ID that has both an image of yourself and a unique identifying number, like a driver's license or a passport. And the third piece of information is the beneficial ownership information. And a beneficial owner can be 2 types of people. The first is anyone who owns more than 25% of the HOA. So as an example, if you're a bulk owner and you own more than 25% of the HOA, you'll count as a beneficial owner. And the second type of beneficial owner is anyone who exercises substantial control over the HOA. And an example of this is somebody who serves on the HOA board. And if you serve on the board, you'll count as a beneficial owner, meaning you're gonna have to submit your information to FinCEN. If you meet either one of these 2 requirements, what information must you report to FinCEN? Well, you'll need to report your name, your birth date, your residential street address, and a government-issued ID that has both an image of yourself and a number on it, like a driver's license or a passport. I also have a new book called The 5 Tricks to Teach Your Kids About Money. You can download the book for free by clicking the link in the description below. If you're looking to start a business, you can schedule a free 15-minute consultation with us at Corporate Direct by also clicking the link in the description below. And as always, please make sure to like, subscribe, leave a comment, and turn on that notification bell. And I should warn you, the contents of this video are not legal advice and no attorney-client relationship has been formed.